Hello traders and investors, I'm L.A. Little. This is your daily NeoTA wrap where we talk about these markets and we do it from a neoclassical perspective. We're looking at supply and demand on the charts, using that information to make better decisions about timing, about direction. I do have a Twitter account. I know some of you are aware of it, some of you may not be aware of it. It's TA Today. If you go to Twitter and you want to follow me, you can just join there. The reason I bring that up is I actually pulled up a couple trades for you, I think a day ago. And unlike most commentators, I actually give you only those setups that have higher probabilities. And the ones that I talked about then, you know, they look hard when you're buying retraces, but the one I talked about then was the TLT, and it was coming into a bullish retest regenerate. There's your retest regenerate, comes into it, right? It's more than 6 bars. Now the bad thing about this is you do want to sell this on a bounce, because with more than 6 bars you shouldn't get that deep, but it did. So this is a sell on a bounce. You didn't quite get an engulfing bullish engulfing today, but I suspect it is going to try and do the bounce. Where's the bounce to? If you take these bars, you look up here and say, where are they? You know, the one that catches my eye is the one at the high, so it's either at the top or the bottom of it. I would think the bottom is where you want to focus on the bounce, take some profits. I also mentioned the gold trade, and this one actually was a better setup than TLT because it did exactly what it should do, and that is it came back into its bullish retest regenerate, and that's this bar here. And you've also got the overlap of the second retest regenerate that's inside of it. You can see it only got about a third of the way in. That's what you would expect if you go more than 6 bars. And so, you know, when I talk about the more than 6 bars, the TLT doesn't look quite as good. That's because this one did what it was expected to do, right? You're always looking, you know what the probabilities are for, and you know what the expectation is. If it does what it should do, and this is a bullish engulfing, it got under, back over, this all looks good for the bounce. That's what it should do. That's what it did. And you start measuring up where's it going to try to go to. You take this bar's bottom, you take this bar's top. Those are the areas. So what you want to do is you want to focus on this spot as it comes back up, see how it trades. If you can't get over it, if it really stalls, if it starts to reverse, then you don't get as much profit as you want. If it gets up to here, it's better, right? If it gets over that, well, then you just keep going. And that's the trades that I outlined on Twitter and brought to your attention. So if you want to look at those kinds of things, I can't do them all on this show, so I do them there. If you want to watch, if you want to follow, if you want to see what comments I do have during the day, that's a good place to do it. As far as these markets, let's take a look at the numbers here. We actually had a pretty good day today that gave way at the end. And even though those indexes aren't going to show it as we look at them, I do think you're going to get some sort of pullback tomorrow. So you end up negative on the NDX, on the NASDAQ, also on the Dow. There's the Dow there. The one that held up was the Russell, and the Russell actually set new highs today. You had gold rebound. It was down. You also had the oil market down. Silver stayed down. Bonds also rebounded, as we were just looking at on that TLT. Over in Europe, these guys have been on a major tear since the election. They continue to add to their gains, and Switzerland doing the same. 0.63 today. That thing has barreled, all of them have barreled higher since the election. Shanghai was flat. The dollar gained a little bit today. We're starting to see a lot of the cross currents off the Trump administration and what they're doing and saying. And what I mean by that is, you know, you can talk a good show, but eventually you got to put up, you got to say something, you got to talk more about the details. So far, we've heard all this great stuff about, you know, massive tax cuts, about this, about that. Today they unveiled the tax cuts. It was a one-pager. A lot of details left out, right? And, you know, I don't know that quite cuts it. Yeah, we know what the intentions were, but we knew that before we came into the day. And so, you know, as they beef these things out, just as they did with the health care bill, right? And as we learn more and more about what these details are really going to be and whether or not these things get passed, whether they're going to have repatriation of the capital from overseas, all these kinds of things, right? As all those details get hashed out, you know, then you get more of the reality, and that's when the market fully prices in whatever it's going to price in. Right now, it's priced in a lot of hope, and we'll see if that hope gets met. We'll see, right? I don't know if it will or not. We got some more economic numbers this week. I believe we got a GDP number. We got the European Bank in the morning. You got Bank of Japan overnight. So all of those are things coming up that could move stuff. Let's take a look at the indexes here. So the indexes themselves actually look pretty good today. So here's your S&P 500. It had this test of this swing point high that it failed yesterday. Tested it again today, failed again today, but again, failed on greater volume. So this says it can test it one more time. And so, if I'm looking at this looks like it can test again. That's the S&P. If I look at the NASDAQ, and the index NASDAQ look almost identical. What you have there is you have this big spike up. Today you got the over-under, but the volumes are about the same. So that says you can test again. The index looks almost exactly the same. And then if you move to the Russell, now the Russell did the unexpected. You had the test failure yesterday. You had it on lighter volume. That said you probably should have failed and started to head back. What does it do? Barrels higher, volume expands. That's a breakout. That's going to confirm bullish again. And I think it's a confirmed bullish. Let's look at the numbers here. 434, 43. No, it's going to be a suspect bullish. So you got three of the four indexes that are broken out. Index-wise, doesn't look too bad. Now, if you walk over though and you start looking at your sectors, it's a different story. You still got some that look good. For example, XLY, this thing's been on a tear, continues to be on a tear, hasn't stopped. XLV added today, did pretty good. But then you have some others like bearish engulfings on the consumer durables, right? Big bearish engulfing bar. If you walk over to technology actually failed over under less volume after an extended move. I wouldn't call that quite extended. Well, it actually is on this time frame. It is extended. So that's a 2-bar reversal. That's going to try and come back tomorrow. That's what it should do. And we're always talking about what shouldn't happen. And then you measure against that, right? That's the whole ideal. Industrials didn't look too bad today, but they did an over-under. It had slightly less volume, so that's not a very good tell. Could try again. XLF also fails again on less volume at a swing point high. That looks like it should try and come back in. Energy tried to pop up, had a tough time, didn't really stay up there, but had more volume. Basic materials does an over-under less volume. Going to try to come back and start the bullish retest regen. Notice that when you have a bullish retest regen and the bar that you broke is wide, right? In this case, you get a very wide bar. That says that it can come to the bottom third of that bar down in here somewhere. And if that's what you're looking at, right, that's a pretty decent way down. So that makes it kind of hard to trade something like that. If we move over, look at the rest of these, I think the only other two that have interest are transports. Transports come off yesterday, come off again today. And then finally, if you look at the semiconductors, now the semiconductors came off with heavy volume, bearish engulfing, right? This thing came back deep. I would think that, this nice big spike up is probably done again for a little while, and you're still in that range. Now, I've talked about the ranges a lot on the S&P, on the general indexes. And I said, I don't know how these things are going to break out. But, bust my britches, they did, right? They bust out. They moved to new highs, especially if you're looking at like the NASDAQ here, right? You go busting out, you break out, and you hit new highs. That's clearly not in the range anymore, right? So that's a nominal new high. And I did say that we could get nominal new highs, but even that is stretching the ideal of a nominal, right? That's a pretty good move. And so when I'm looking at this, I'm saying, man, this is a lot stronger than I expected it was going to be. And so when you get that kind of a push, that pullback when it comes in, right, back into this area, there's going to be buyers sitting there. And they're probably going to front run it. They're going to get up here just above it and start buying it. And so as this market comes back in, when it comes back in, you have to expect you're going to find buyers at these price points. And so this little overlapping area here, if I can draw it in for you, this little overlapping right there, that looks like a pretty good buy spot for anything that comes back. And so we'll see how it behaves when it finally does. If it comes back within 6 bars, what does that mean? That says you can get into the bottom third of the retest regenerate, and that would put you down into this area down here. And let me grab this eraser, get rid of these extra boxes. That would get you down into this area here, right? That's a pretty good drop back in here. And so we'll see, does it come back within 6 bars? That pretty much says it has to come back this week or Monday. If we move over, I want to look at a couple more things because we got earnings coming out. You got all your big cap techs coming out this week and next. And I'm talking about the large, weightings that are out there. And in particular, some of these, what I'm seeing is some of these stocks are getting hugely hit if they miss. And like here's steel, U.S. Steel. This thing got clobbered. Look at it. Look at the bearish engulfing, huge volume expansion. That's a mess. Are we going to see any kind of misses from tech stocks? If we pop through them real quick, the ones I believe tomorrow is Microsoft. That's an over/under. That probably is going to try to pull back. If I look at Google, and these are extended on the MTTFs. If I look at Google, over/under as well. If I look at Apple, Apple came off with slightly more volume, but Apple still doesn't look bad. And finally, if I go look at Amazon, Amazon's been a huge part of the XLY move. Amazon's still hanging up there too. So these are testing into an area where they've got to get some pretty big hits to keep going, or they got to talk it up, raise guidance, or get huge, sales and revenue overstatements on this quarter, or I don't know how they're going to keep pushing because they're extended already. Matter of fact, almost all of them are very extended in terms of time and price, and so that makes it very hard to keep going. These have what's fueled the NDX and fueled the NASDAQ, and as you know, the NASDAQ is what's driving this market, and so these are going to be major reports after the bell tomorrow into the Friday trading session. That to me is going to be the make or break as to whether this comes back within 6 bars and trades deeper into that retest regenerate zone that I just pushed out upon you. That's it for tonight. Be waiting to see what we see after the bell tomorrow and how Friday is going to shape up. I think that's going to be the key days. ECB in the morning could do a little bit of a shake up there. I don't think that's going to be a big thing. And if I remember right, I think GDP is on Friday. Have yourself a great one. Take care. I'll see you next time.